Howdy, Casey. Howdy, howdy, howdy. Good to see you. Spending time. Good to see you here as well. Final morning. Well, again, call me lazy for not changing the title, or I mean, you've been here, you've been here long enough and around to know that processes in the market take a little bit more time. I know you're just kidding around. It's good. It's good. Still, it's. I don't mind. I really don't mind. Even if it's kind of criticism, like it's fine. It's all good. Let's give people some time to join in. JF, any stocks you'd recommend buying into during the upcoming dip? Not financial. I mean, JF, it's not a secret. My only position that I currently have, I've sold Tesla, Palantir, etc. When Tesla was at around 300. We never seen these levels since. Probably should bring the chart on so it'll be less boring, I guess. Let's look at S&P while we're talking. So let me get back to the chat for a sec. I'm holding currently one position, is the SQQQ. Of course, you don't want to be holding it for too long because it has time decay, a commission, if you will. It does pay dividends. In other ways, it sort of pays its own commission if you do it right. But I say research the asset very well before you dip into it. It's not for everyone, and you really have to be very attentive with your position, understand what your plan is regarding it. But I'm currently not holding anything, and I cannot even say, sort of off record with regards to advice or not advice. It's not going to be smart buying any asset unless you're going to have, I mean, look, it really depends on your strategy. If you're DCAing into it, buy the stocks you like. As the price gets lower and lower and lower, potentially, if I'm correct, it will give you better results. You'll be able to DCA into it. Again, regarding selling, shorting, all that nonsense, that's you have to be very meticulous, very a professional in that field to even go and do these sort of things. I don't recommend, but so I can't sort of say that there is any particular asset that should be doing extremely well out of the ordinary, why you should be sort of in advance buying it. I would say, wait for the knife to actually start falling, recognize that it is, don't try to catch it, let it fall, pick it up. That's the smartest way to go about it. Or I don't know if we're going to have more people joining in. Doesn't seem like today is going to be a busy day in terms of people, but let's get started. I don't want to waste your time, guys. I mean, it's not going to be fair either. All right, so let's get into it. 1 minute, you can see we've been sort of since the day opened, we made a bit of a gap, made a bit of a boo-boo right here, and we closed the gap, right? You know what? There's a funny pattern that is, I wonder if the market is trying to tell us something. I wonder if we should maybe name this pattern somehow. How do you say? Maybe like the market is flipping us off or giving us the bird? What do you say? How should we call this pattern? I mean, jokes aside, although the market is flipping us off today. Yeah. Assets, right? Yeah, I mean, none of the assets. Yeah, JF, I hope that helped. Yeah, so let's get into this. So, I mean, it's pretty evident that the structure we're building on the 1 minute chart, although it doesn't really matter because we know this thing can and will flip over a billion times throughout the day. So that's not a big deal. This is not the important part. Of course, I always show you the 1 minute time frame, guys, just to not think I'm hiding something, right? I mean, there's not a lot to hide here. At the end of the day, you can predict what, 10 minutes, 15 minutes out if you're really good. In the context of everything, it's nothing, it's meaningless. So let's look at 5 minutes. 5 minutes is a little bit more interesting. We're starting to see that we've basically squeezed out this momentum, very similarly to how I've been telling you that we will be squeezing from the bottom, although we've penetrated. Shouldn't take that at face value. That's it, we're going down. No more often we retest certain supports and resistances. In this instance, it was the channel, which was evident. We're basically moving into almost this wedge formation. Yes, we'll have the bird and another bird. The market likes to flip us off, but pardon me. The point being, we are moving currently. If you're more attentive than not, you realize we're more so moving into this wedge formation. This is what's sort of retaining our price action as we go. But again, 5 minutes, in the context of everything, that's sort of meaningless. This, for example, what we're seeing, pardon me, what we're seeing here, like all of this correction, even if we're going to dwell a little bit here, so basically retesting that resistance, similar to how I told you things are going to look like. Even if we test back down, this is pretty much indicative of us breaking through that support here, but nothing much. So it's not that crazy. It's not like we can predict a significant movement out of here. I just sort of wanted to show it for a second, so you guys make sure I'm not hiding anything, like I said. Flipbird, I made it to the live. All right, welcome. Good to see you guys, new guys, people I don't get to see on the lives usually. Welcome, welcome, welcome. Thomas, good to see you here. So 5 minutes is not that interesting, but as we can see, a trend down and probably starting to break below that support. That I would argue that this is more than enough to start bringing us close to this support, and you will see why I think we're actually going to break below it. And again, an acceleration, something very similar to what I told you, you will see sometimes on some of the time frames because they represent different things. So on the smaller time frame, very similar to the larger time frames, and I describe this almost like when you skip rope. So it says there's a big jump at times and you're going to have a small jump, right? A smaller wave, a corrective wave. But all in all, once you zoom out and you're kind of more attentive, and this is what I've been trying to tell you guys all along, once we're going to hit that resistance, what we're going to see, of course, are movements up and down around this support, testing it, or rather in this instance, it's going to be a resistance before it turns to be support, if at all, potentially. And that's why I said, and I told you, I think this is going to break back down. So take that with a grain of salt. Even though we were already moving here, starting to move up, I said potentially we're going to break back down. What does that mean? Does that mean we can be moving, correcting, again, having a convergence, divergence again on the stochastic RSI, implying that actually we're going to have more of a bullish procession, right? Continuing into that overarching trend that we've been going on at this channel. But really remember, the larger the time frame that we're going to look at, the more indicative it is of what the market is actually doing. So let's kind of, skip the 30 minutes because it's not that indicative. We can maybe derive 30 minutes out of it all in all. Let's look at the 45 minutes. 45 minutes is actually very bullish. If you're looking objectively at this, by the way, this rectangle here represents the original gap we have had made here, the leftovers, if you will, the way it's perceived by this time frame. Actually, it's a little bit bigger. That gap actually starts at this blue level, basically the one I told you we will use as resistance. You can see it a little bit clearer on this time frame. You can see how the price action tried to break through and was pushed back down. This entire wick represents price action that took place but was pushed back down below that resistance, hence resistance. And you can see we're testing and trying to break it again and again. Here's another attempt. Again, you can see we were somewhat successful temporarily. So here right now we are inside the gap, right? You can see this price action, it's actually inside. So all nice and dandy. But I would argue, and this is very normal, as you would see right through these wicks or this wick, that we are able to penetrate. It's just that on the larger time frames, the indication, although we're having this going on right now, so we're already in oversold territory and should be moving downwards, in reality we're testing upwards. How is that? It's not that it's contradictive, it's that the larger time frame is more important. It is something you will see once we're going to start switching to the hourly. So in other words, we're squeezing out here what we saw or what we will see on other time frames. Okay, it's not indicative necessarily of a larger move, but it is indicative of a shorter time frame. That means, yes, potentially we might see penetration into this gap that we've opened up before. We already see that we've tested these levels, and I would argue that, that was the argument all along, that even though we will test into this gap, this is what I'm starting to see, unlike the other ones that I told you we were probably close, but improbable that we will get to this gap. Right now that we're finally made it to the ceiling, if you will, we can recognize, identify the price action being basically pushed back by that resistance, by that ceiling. And due to the momentum that we'll see on larger time frames, it doesn't seem like we will actually be able to penetrate and find it as support. Remember, for the price action to continue to the upside, it will need to confirm that level as support and not just do it once or twice. Usually takes a while. Midwest, good to see you here. Okay, okay, I'm not gonna deviate. All right, so let's look at this. So the 1 hour time frame is not going to surprise us either. Okay, we said oftentimes when we move into the oversold, likewise to the overbought territory, especially on the 1 hour time frame, because it would seem as if it is very stretched, but on this time frame we can actually recognize significant movements, and we can recognize oftentimes that although we've been on the top and we don't just move up and down, and I told you there is a more sophisticated rhythm to the market, this simply allows us to recognize the current trend, the current volume that we're having, similarly like a seismograph that will give you the impulses, or a speedometer, if you will, or a fuel gauge. Okay, so it is indicative to a limited point of view, if you will. So as you can see, by the way, funny enough, the majority of the movement to the upside is happening, as I said, gets amplified when we spend this time. So although it seems like we already went into the oversold territory, and some of you would argue, Greg, though it's going to be bullish because we're going to push upwards. Well, who's to say that we're not about to do something similar to what we've done here? In other words, spend a lot of time in the oversold territory, amplifying the effects. Pardon me for my phone noises in the background. I will shut it up in a second. Now, 4 hours. 4 hours becomes the 4 hour, those of you who are new or haven't heard me mention this, the 4 hour is a very important time frame to look at all in all, because it starts to actually give you a better perception of what is actually happening in the market. And right now my argument that the buyers will start to get boiled like a crab. In other words, as long as we retain a smaller movement to the upside, a smaller corrective movement than we will have to the downside, you will slowly get boiled. It will take time, and as I said, this entire period will be very volatile, meaning what will feel significant movements to the upside, significant movements to the downside, but we want to be attentive of whether we're going to start getting new lower lows. In other words, whether our next low is going to be actually lower than this low, or potentially testing the same support, and of course, so much so as we will see lower highs. If these highs will be retaining these downwards trajectory, even though it's probably going to change its angle as we're going to go, still that is indicative of a movement downwards. There is a lot more at play here. There are harmonics. Harmonics actually are very indicative that we are going down. And right now, because of the exuberance, because of the FOMO, I hate to say it, but this is the old school FOMO. Nothing has changed. It's pretty much the same thing as we've been having and seeing in the market for a very long time. And you can actually see it on this time frame very easily, how the price action was accelerating up at a particular rate, stumbled upon this resistance, and has basically been going sideways for the past, 4 sessions, if you will. Now, what are we seeing on the indicator? The stochastic RSI tells us something very, very simple. It's not just that the bearish momentum is the dominant right now. It's more so that we already spent a significant period of time, as we do in the overbought territory, right? And we are pretty much ripe, getting more than ready. You can start to see the angle, the shift, start to shift down to the downside. You can see the difference between this segment, and this segment, right? We can recognize the difference, how we basically finalize the wave, and now we're starting to move into the corrective process. Now, because this represents this, the 4 hours is pretty much identical. The only difference, again, because we're looking at the S&P, we will not see the pre and post market columns because it's done in the continuous contract in the futures, but really oftentimes these are the 4 hours identical to the daily. They oftentimes can find themselves contradictory, but what happens, ask yourself, if they basically are in agreement, doesn't that amplify the confidence that we are about to see whatever type of movement? I would argue so. And something I've been telling you during the previous sessions that we are seeing, as you see, these same circles were highlighting basically this entire process. And what I've been trying to tell you why this represents something very similar is just slightly shrunken in. You can see the exact thing here. You see the same circles placed on the same locations, just that this process now seems a little bit smaller, a little bit smoother, if you will, right? It takes out the exceptions. It just creates an average. Smoother. Makes sense. And here we can see something very interesting. Let me just blow it up again. bearish dominant. Remember, the orange line, well, you have your K, the blue line is your K, your D is your orange line, your K, the blue line, represents bullish momentum, the orange line, the D, represents the bearish momentum. And when you have the blue line or the bullish momentum dominant, guess what you will have as that representation? Remember, it's a seismograph. It's just a tool that you use to have a reading to what the market actually does. Notice something very simple. If blue line dominant, market go up. Orange line dominant, market go down. Very simple, right? You can actually confine these partitions and recognize how they correlate to one another, okay? Just for it to make sense to you guys why it's so important. And subsequently, if we're going to have here a corrective movement, we don't know if it's going to be this big, if it's going to be this big, or it's going to be this big. There are better ways to read how deep the corrective movement will be. Again, not using these particular tools, but more so, even this does give you a form of an indication. What do we mean? Remember, if we can use these methods to have a reading of a couple of candlesticks out based upon how the momentum is setting itself up to be, right? It's only a couple of candlesticks. Because we're on the daily, here we can predict what means or equates to a couple of days. Makes sense? Simple. It's a simple equation. But if we also say we can do that same process basically on all the time frames, and we can predict maybe one or just two candlesticks, which would not seem like a lot on the weekly, actually, because weekly, think about it, weekly also just two candlesticks, it is short term for the weekly chart, but it is long term for the daily chart. In other words, on the weekly, we can almost predict what is going to be here, what is going to be further down the line, what this entire process is going to be signifying in the overarching larger process, right? The rhythm of the market. Now let's look at it for a second, because we're going to be able to understand what the market is really trying to do. Are we actually going up, or are we actually going down? Okay, so let's look at this more. So remember, we've opened up a bunch of gaps on our way to the upside. We have closed many gaps that we have created to the downside, which is good, but we have not yet finalized the final last one. We have now penetrated in, like I told you, but we are not, it doesn't seem like we're able to close it. Okay, that gap, just to be completely clear, is between this blue line and this blue line, so you can see the numbers right here, is between 5,667.21, if to be super scalpel precise, 5,607.48. This is exactly where the gap precisely is, although we've closed a partition of it all the way to here. But is that indicative or representative that the gap will be closed? Not yet. We should be more attentive to the market's ability or inability to break through that resistance. That is far more important. That is the task at hand. Or as I shown you before, we are basically, this is a larger scale trend. So in other words, we're making this wedge. We're filling this wedge right now. That's what it seems to be like. Potentially will end up with a breakout or a breakdown, okay, or rejection. We will see what the market implies that we will see. Okay, let's look at what the market tells us. So weekly looks actually very bullish, as most of you tend to perceive it, because, well, the K is dominant, right? It is on top. More so, we're pointed upwards, so we would think, well, the trend is going to take us up to the upside. But I will point out that the market doesn't work this way. The rhythm is prolonged, especially once we start going into the larger time frames. Who's to say that the market is not doing this? Now, why would I even argue the market is doing this, right? Remember, the larger time frame is more indicative of what we're actually doing. The smaller time frame relative to the larger time frame shows you the granularity, the day-to-day of what we're doing. Okay, the price action rather. So let's look at the monthly. The monthly, as I warned you, the monthly haven't even started showing these corrective movements. But once this candlestick is complete in about 9 days, we're about to have Jackson Hole in between. There's many reports that will come out. There are plenty of reasons for the market to be able to droop before that candlestick is locked in. And it within itself, as it already is, will imply a corrective movement and potentially a convergence and divergence of the K and the D. In other words, allowing the bearish momentum to become dominant. And this is why, well, you know, the beginning, sort of in the beginning of the session, the joke was, you know, final warning. Yes, in the context of the market, the final warning can take a week and even a month. And you should be lucky that that's the case, because it's only people are smart in hindsight, again, just to be able to look back and say, I had so many warnings and I should have gotten out, but I didn't, right? Because at the time I had the bias of already having the positions that are bullish in nature, okay? Let me give a stop there for a second and look at the chat, just so I'm not gonna miss anything. Do you think we are going to hit new all-time highs before the correction? It's not fair from... it's not far from all-time high. Very good. Actually, that's a very good question. I spoke about this with a student of mine the other day. Those of you who are familiar with harmonics and larger precession, larger cycles, yes, there is a small probability, I would give it about 30% if I have to be generous, of a part of that corrective movement, just to kind of give you that in a better perception. Let's switch back to the daily. There could be still, and it's something I've discussed with my students just the other day. By the way, quick mention, I do a course, a one-on-one technical analysis course. I teach all that wonderful stuff, and I now have one final spot. I have a couple of new students that joined in, so that is one final spot between the members and the public. Doesn't matter, whoever gets it gets it. I will be going on a short vacation very soon because I have a birthday at the end of the month, and I will be back probably like a week or so into September. So heads up, if you're interested in learning technicals properly, reach out to me. That's a one-on-one technical analysis course on our Discord. And yeah, so hurry up, because there's literally one spot, and whoever grabs it grabs it. Public members, I don't care, to be frank. Now let's continue with this. So wait, I was answering something. All-time high. Yeah, there could be a circumstance where this trend will continue and we will hit something akin to this range. Could be, by the way, which is funny enough, those of you who know Tom Lee, actually, shout out. The only one time I would give a proper shout out to Tom Lee, that's actually Tom Lee's target. I think it might have changed and readjusted, but I think that's his target, if I'm not mistaken, like 5,800. So that could be still a thing. Do I see that happening right now? No, I'm seeing the momentum. As you can see yourself, the momentum was going very rapidly to the upside, and now it took basically this kind of sideways movement direction. As I showed you, there is a wedge here to be filled. I'm not going to be surprised if that's the case. More so, it starts to seem like an inverted head and shoulders on a smaller time frame. Not going to be surprised if that's the case, which is funny enough, by the way, still potentially can lead to a new all-time high. Still within the vicinity, within the range of what Tom Lee would have said would have been his area of his target, right? Could be. Do I think that's the case? There is a precession that makes me think and see, because of how the time frames are structured, and I know they're kind of contradictory to one another at times, because of what we're seeing on the daily. In my opinion, we're already starting to break down. Of course, we could argue different ways. Time will tell, right? As someone smart said, predicting the future is very hard, and all that wonderful stuff. So you can see this. So this could take a while, right? But this is not indicative necessarily that we will be going this way around this time. I do think that the smaller time frames are indicative that we're going to take a correction downwards, which will start to show here very soon, very shortly. As I was warning, I was actually kind of navigating this process with you guys. I was telling you all of this is going to happen. I was not biased. I was telling you it's going to be bullish. And now when it's time to tell you that it's probably going to revert to be bearish, I am telling you what I see. Whether you guys like it or not, here we're not here about biases. We're here about what the technicals are showing us, what they're giving us. Whatever you do is up to you. You're all big boys and girls. Now, so yeah, to answer that, there could be, but I'm giving it about 30%, and I would argue that I'm being very generous, currently giving it even that potential of 30% of actually taking place and giving us another all-time high, which, if it will give us that all-time high, one way or another, that is, again, this will be, if you're going to be able to zoom out later, right, even if it's going to give you that all-time high and have a, have a structure that is internal here, right? Before we break down something akin to this, when you're going to look back, you're going to realize, yes, we had a trend up, right? Very fast, very rapid, took a sideways action and then started correcting downwards. Why do we argue that? I'm going to skip a bit. I'm going to be a bit of an asshole here, but guys, you cannot escape this. This is, I'm sorry to sound like that, but literally, this is the yearly chart, okay? This is the 12-month. Every single candlestick is a year. Let me just rebalance this and clean it up a little bit, okay? Clean it, oh, my bad. Clean it up, we said, and switch to the yearly. So the yearly implies that this entire corrective process that we've been doing so far, all in all, and it's something I've said during the beginning of this, beginning of the end of the cycle. If you really want to define this area in whatever way you want to define it, that's going to be the beginning of the end of the cycle. The cycle is long. It can take... there are different types of cycles, smaller ones, but the cycle that we're looking at ranges around the 20 to 30 years. Okay, far usually closer to the 30-year range. Usually, to be more accurate about things, it's never an exact nice number. For example, if you're going to look at the process we've had during the tech crash in 2000 and then subsequently the housing bubble and all of that wonderful stuff, if you're going to look at the process that took from here to here, that was literally 13 years for people just to break even. Those who are unlucky, and again, it doesn't matter whether you bought at the complete top or the complete bottom, the entire process, give or take, took you about 12 to 13 years to break even, not start seeing profits. It doesn't matter whether you bought here, or here. The argument is not about that. The argument that was an excessive high relative to the process. Okay, if we're going to switch it to logarithmic unadjusted, you'll be able to see how prolonged this process was. Okay, it's not that different, ladies and gents, from the process we've been having now. Just for you to grasp the idea. The cycles, that's just how they work. Now, so if we're going to look at the yearly chart, we're going to understand really from the momentum that all of the correction process and the fact of the matter that the market potentially would have even wanted to go even higher, but it can't. It simply has its limitations. There is the too high, too far, too fast factor, as we call it. There are the macroeconomic conditions right now, the geopolitical conditions, election year, so many factors, oil prices, which some would argue that 71 is lower and we're doing so much better than we did before. And yes, I would absolutely agree. This is so much better than, beating the head on the 80 range. Absolutely, I would agree. But still, if you're going to look at the overall process, right, the further out you're going to go, you're going to realize, well, let's swing sideways. We've kind of been testing the same range, which is normal. What you're going to realize that on the overarching trend currently, right, it is a trend upwards. So yes, we've been going up, temporarily going what would seem downwards, but really we're basically moving to the side of the trend. We hit that range, we're moving to the other range. It might be a process. We might not necessarily even gonna fill it in properly, because what people are not attentive to right now, what is going on, because we have this juncture of both trends, and it becomes very difficult to sort of go through. But really what we are still retaining and still holding us up is that median of that trend. So in other words, although temporarily down on an uptrend. So given some time, we're going to see again the 80s, the 90s, and subsequently, if you ask me, JPM's 100, okay, or Jamie Dimon's, if you will. Happy birthday, Gary. Don't do that. It's too early. Never do that. But thank you. EV bike dude. I can't wait for the EV bike industry to be big. Can't wait. Eric usually shows after a downtrend. Well, we can argue about that. Hey, 30 years. That's why Tom's DCA method works. That's true. Actually, Mike, that's the thing. Tom's method is essentially bulletproof no matter what you do. At the end of the day, even what we're gonna see. Actually, that's such a good point. You know what, Mike? Thank you. I'm gonna do that for a second. Right now, we're extended. My argument that just for the market to normalize, we're potentially gonna break back down to ranges that are actually lower than this. I'm gonna break down to lower than 3,400. 34.91, if I'm not mistaken. That's the particular number. It's not going to be necessarily by a lot. There are several ranges that will catch us. But this sheer process of the corrective movement to retain the overall larger overarching trend inevitably going to bring us significantly lower, just for the market to retain and will stay healthy. And you would think that it is normal that we're going to penetrate that area. No, there's a larger trend that you cannot not see right now. Sadly, my linear regression doesn't work well with what's going on here, not on this time frame. If we're going to go into the 6 months, it's slightly more better rebalanced. You can see sort of the exception. We ran too hot, yes, but it's not as hot as you think. Right? There's enough room for that correction without it being completely exceptional. My opinion that we're not going to see lows that are below 3,000. I mean, that is excessive. But I do think subsequently during that correction and during that process, if you're going to look at 6 months, it's kind of contradictory, right? So here it is. But notice the market moves in that fashion. And it seems like this is a short range because it's just a small amount of candlesticks. Let me just remove all that noise so it will be clearer, right? But again, notice that this correction, this process, in the entirety of it, those are these 13 years. Remember, we're looking here at 6-month candlesticks, half-year candlesticks. So that process, although seems to be tiny in the overarching sort of thing when we're looking from afar, but really that's 13 years, gentlemen. You guys feel the pain on a daily, day-to-day basis. And imagine if we're not even going to go that bad. Even if it's not going to be this bad, it's going to be partially as bad. As you can see, again, we've never got that high. All in all, the thing that happened to us several years ago, wink, wink, don't want to mention. Don't want to get a penalty from YouTube. YouTube, I'm a good boy. Don't punish me. Don't punish me. So, this is a very similar process. And I know the argument would be, Greg, it's going to go up, bullish. I argue that that's not the case, and you can see that the overarching trend is telling you, yes, imagine that this is so overarching that these internal processes that you see are internal, right? But it's going to be internal. So downtrend, sort of uptrend temporarily, and uptrend inside the downtrend. So you see, the overarching thing will subsequently inevitably going to lead us downwards. And with all the reasoning and the noise that we have for a recession, my argument here is that we're starting to see the visual form of the recession, and nobody's even talking. Like, notice that we're here talking about the movement downwards. How about the fact of the matter that when we actually get to the oversold territory, even if we spend there what would seem like not a lot of time, again, ladies and gents, that is 3,653 days, not including weekends. Okay, so that is a long period of time just to be, you know what, half of it. 1,500 days. How many years is that, ladies and gents? So understand this sheer process, just the downtrend, the corrective movement, and then the process that we will be doing here is the representation of that recession that I'm thinking is coming, that we recognize through the macroeconomics. And I know a lot of people bring the argument of Trump is going to be reelected, everything's going to be better, you know, make America great again, and all that wonderful stuff. Trump is not a magician. Trump will not go into office, will sprinkle some fairy dust, you know, move his wand from left to right, and suddenly everything magically will get resolved. And that's not how things work. I don't know if it's completely true, but it seems Ukraine is getting very bold and attacking Moscow. It seems I might get a present from Putin, you know, the beginning of World War III for my birthday. So you guys don't hurry up thinking that everything is so nice. And more so, I do like the talking heads of the media. Of course, they will always be telling you that everything is bullish, because even if they will recognize that there is a reasoning for them to run towards the door, you guys need to continuously think that everything is going to be better. Otherwise, nobody will be buying when they will be selling. They need you guys to be convinced that there is a higher high to be had, right? The greater fool theory. That's how the market works at the end of the day. None of you is truly invested in none of these companies and are rooting for their success, so much so that even if the company starts to break down, you start putting your own money into the company to the point that you want it to survive, right? That's not the case. Everybody here are after making ROI gains, right? So let's focus on what we're here for. And if the market will go for a correction, it will be unpleasant. Those who are smart will DCA into it. at the bottom, not in trying to catch a falling knife. Remember, even when we hit the bottom is not flat, right? We're just kind of scraping the bottom. It's going to be an up and down on the bottom. Remember how when we do hit the bottom, suddenly there is no argument about the bottom. Everybody agrees it's the bottom, right? So don't be one of those guys trying to catch a falling knife. Let the bottom hit. The bottom itself is not a line. It's a range. And at times, it's a very extensive, very wide range. So DCA into the bottom, not just DCA. That's going to be the smart thing to do because this process could be long. But more so, again, not financial advice, guys. I'm just telling you what I see and how I perceive to handle my account. You handle your accounts the way you think smarter. And more so, by the way, another thing, those of you who know, I've mentioned this. If you blow up the tool, sometimes it's very hard to read these tools, especially when they're so shrunken like this. It almost looks flat. No, it's not. What it really is a very clear, very indicative trend represented by the momentum that is represented by the tool. Okay, so the tool, again, is a seismograph. The seismograph it doesn't just go up and down, implying an up and down trend. Not how it works. The tool implies what the market is doing. The rhythm of the market is not 1, 2, 1, 2, 1, 2. That's kind of what you're imagining, almost a binary thing. That's impossible, improbable, and just cannot be. The market will never go anywhere this way. So the trend here that is implied through this process is still a downwards trend, just like Mike said, an upwards trend within a downwards trend, and you can actually see it on the quarterly chart perfectly. More so, you have to blow up the chart to see it well. Okay. I think I kind of went all over the place and ran through. I made a big boo-boo there that I kind of jumped, but you guys know nothing really changed. The only difference is that I thought this is important to bring you up to speed. That as I was, being a guide to you through the process of this uptrend that we've been having, right? I also want to warn you that I'm seeing that this uptrend is coming to an end. You guys do you do what you think is right. I think this uptrend will not allow us to reach a new all-time high based upon the momentum that we're seeing. And that's it. That's the gist of it. I guess I don't want to expand on that far too much. There's no reason to. Let's see some questions. I answered that one. Question, expanding timer. Would you decide the correction crash isn't going to happen the way you predict? That's a very good question. It will take a while. We'll have to make not just... let me just tell you that even if we hit Tom Lee's highs, the 5,800, it doesn't mean that we're not going to move downward. There will not be a overarching bigger corrective movement. No, it doesn't mean that. When will I see that? When the indicators will imply that. Currently, they're not doing that. I mean, the way I work is I read the technicals, I combine them with the fundamentals, I combine them with the macroeconomics, and I come out with a singular equation. So oftentimes, if you do the things right, they do not contradict each other. I'm just going to tell you that. Oftentimes, if they contradict each other, you probably missed something. You know how they say, if everything is going smoothly, it's not that everything is great, you just missed something. Oh yeah, I've skipped all that. Brad is here. Hey Brad, hello. Hello my zero. What about... you have a zero? You never told me, Ellen. I am a big fan. I'm such a nerd when it comes to all of them. I know so many. I'm dying for the industry to be really big. I mean, stealthy, fast, a bit dangerous, but I mean, what bike isn't? So you have to be a responsible driver always. So... I'm gonna take 13 plus years. No, I don't think, JF, I don't think this case is gonna be 13 plus years. I'm just giving an example that it can be that long. In this instance, I think the market is far healthier. I think the economy will be healthier. Trump will do his part. All these things will subsequently lead to an improving economy. I do think so. It's not gonna take 13 years. But when we're gonna look back at the whole process, beginning to end, right? Ripple effects and all, it's gonna be like 7 years all in all, 7, 8. I mean, that's not a short period. And you know what? I hate to admit something. Shout out to Stonks Tycoon, a member of our community. We talked about and just kind of mentioned and reminded me. I wouldn't say I forgot, but remember, guys, how the Fed were saying it's all transitory. And I hate to admit it, and I said this in the beginning. 8 years compared to 13 still is transitory. Okay, it sucks. It's very long, and again, I'm exaggerating here. It could be, we could end up being done in 6, right? It depends on how you want to measure the uptrend. If you want to start measuring the next cycle from the low point, then it might you might look back then and say the whole downtrend process took 6 years all in all, and the 7th year was already the year where we started to correct. So yeah. In other words, implying that the recession, just like we see it on the 12-month chart, is going to take about 2 candlesticks, which means about 2 years-ish, Scraping the bottom will take us about 6 months, no less. I would be surprised if less. So, yeah. It's not gonna be rapid and straightforward. Zoom out. 40 years. Keep looking. Very good, Mike. Very good. It's only when you zoom out far enough you're able to see these processes and how far and prolonged they are. Very good. But then the problem is they lose focus on the fact of the matter that the chart is condensed and just a couple of candlesticks. Yes, a couple of candlesticks of 12 months. So, I mean, you read that as you wish. Hello. Michael, hello. You're not late. Finally able to join the live. Mac, you're not late as well. You're all guys all in time. You'll be able to rewatch this. It's not like I've changed my opinion, guys. I hate to be consistently consistent. Those who know me from the community and been around with us for the last 4 years now, moving on to the 5th, I think. Crazy to think that, wow, time flies. It's insane to even think that. Shout out to our amazing Discord community that is now, let me brag a little bit. 17,300 people, public and members all in all. Guys, join the community. Links are below. Those who don't know. Don't forget to confirm the rules in the beginning, the disclaimer and all that stuff. Otherwise, you'll be stuck in limbo. There are plenty of very valuable resources, conversations, and all in all in this Discord. It's a tremendous community and a resource. I just love it to death. Put tons of, just I can't describe how many sleepless nights of work into this thing, and it's amazing. I love it. You guys will enjoy it, I think. I think my card expired. Okay, I see that's Tycoon, not to me. We just need better batteries. Yeah, that's true. Actually, yeah, EV. I mean, more so. At the end of the day, it comes down to better batteries. I would agree. And I don't like the way they're now trying to move away from the classic motorcycle design, which sucks because that sort of gives you balance. And what sucked about the old motors in a way is because they had the internal mechanisms vibrate and move as much as they did, and kind of that took away from the riding experience. And now with the motors finally being solid state, if you will, not too many moving parts, nothing about the whole mechanism, which allows you to enjoy the ride, but now you're riding basically on a gigantic battery, at times also volatile and all sorts of things. And especially in America, given the fact that I'm here in Israel, charging ports everywhere, right? And there is no range anxiety, but you guys, I understand that. I understand the problems with the EV bike industry still, but I'm completely rooting for it. I love it. I love the, the stealthy nature and I just love what it can be. That's that. I'm nerding out on motorcycles, guys. I'm so sorry. That was not the intention. Less than 14 months. Okay, I mean that's 18 months. Gene, I don't know how to tell you that's cool, but that's where we're talking about the recession process itself, right? We're talking consider the side effects and the ripple effects and all that wonderful stuff. It's not about if we sort of confine certain processes to certain time frames. All in all, it took a lot longer. It feels like 2. It's crazy. It's crazy how time flies. Yeah, I mean the community is basically closing on the fifth year soon. I think I really haven't really checked, but Discord, yeah, it definitely is 4 years in, and just it's insane. It's insane how the community grew and how amazing of a resource and a community it is. I personally, like I said, it's just amazing even to me. More so how successful and how fun it is. Like I enjoy every day I join. I don't have to scour the internet anymore for tons of articles. The information finds me there. I bring other information to other people. We debate all sorts of topics ranging from crypto to I mean, what else would I want? It's better than any trading floor I ever worked on. So mm, awesome stream, Alex. My pleasure, brother. Thank you for coming. Love you much, Alex. A great member of our community. The EV Dude Bike, 100%. Yeah, yeah. No, I think we're on the same page. I think we're on the same page. Useless. You and I definitely can have a fun conversation about that on the Discord. I am absolutely into the idea that EV motorcycles will be, you know, the next EV step, if you will. I mean, we've already done trucks proper. Cars are done. All we have to do now is just have real, and it's starting to happen. We're seeing it. We're seeing it starting to happen. I don't know what that is. No one cares. Something. What is that? Of course, I mean, it's not like Nvidia is any different. It's not like Nvidia exists in a vacuum or anything, and it's going to be any different. It is impressive how we were able to correct back up. But again, if you're going to look at the context of things, so lower highs, you know, it's something that you cannot avoid. The market is almost telling you guys, we were not, you know, it's not good overall, right? It's almost inevitable that we're going to finish with this correction. And remember, this cannot, and this range looks horrible. If this is an opening cycle, if you will, this is a very bad way to draw it, but the third impulse here is going to be ugly as all hell. I mean, definitely not going to go to the left, but you get the idea. Which is very indicative again of that movement we're going to have on the S&P and the other indices. So it goes hand in hand. It's not like the Nvidia can avoid the tsunami. Nvidia can stay afloat better, probably survive the process better, right? You know, swallow less water, if you will, but it's not going to avoid the tsunami altogether. It's impossible. Palantir, Tesla, you name it. You have to have something that works like a pulley system, that works opposite to the market. Inverse correlation, if you will. Scooters. I hate the scooters. Evie, I hate the scooters. These scooters are a big danger. People here in Israel getting hit left and right. Those usually go to children. Children completely abuse that stuff. I hate the scooters. Evie, don't get me started on the scooters. I'm gonna go mad here. Scooters are bad, or at least not controlled, not regulated well enough. It's a bad thing. I'm not a big fan. Brad, I hope that helped you out, Brad. I mean, not a big deal. It's not gonna be any different than the rest of the market. I would say read the market. You'll know what Nvidia is going to do overall. We should. No, John. No. Don't invest in any EV. Look, I'm bullish on Tesla, sort of on a larger scale, right? On the overarching theme of things, if you will. You know, 5-10 years out, all that wonderful stuff. But I don't like Tesla because it's an EV car company. Don't get me wrong. We like Tesla in the community because we understand it's not a car company. It's far greater than that. It's an AI company. It's energy in the various, again, it's an energy company because again, the solar roofs potential, I do think they will will become a significant revenue bringer eventually down the line, because the idea is perfect. We all have roofs, and not to have a solar roof is it just doesn't make sense. We use that space anyways. I think eventually when Elon will be a little bit more available, he will go back to these failing branches of Tesla. If it's the battery sector right now is doing very well. The energy reserve. So yeah, I know we like Tesla for all the reasons that is not it being a car company. Being a car company is just a small partition of things. Was skipping, not sure if only for me. I hope that's not me. I hope that's not me. My internet seems to be fine. Scooters are like Bitcoin market. It sounds like, well, no, Bitcoin is a complete different thing. Wink, wink. Satoshi Nakamoto. Let's see where Bitcoin started. Darknet. You do your own calculation where what crypto is and who it belongs to, or at least Bitcoin. And if you if you break Bitcoin, I would argue that the entire crypto market just breaks. It doesn't mean that the crypto idea is bad. All in all, it is inevitably, potentially, probably the inevitable future, but not in the form that we have right now. This what we have right now is, pardon the French, bullshit. Till batteries are exactly useless. Good point. Absolutely, an amazing point, my brother. And more so, even then, I'm not sure it's going to be a good idea. I'm not sure it's like, no, I'm not sure it's going to be a good idea. Honestly, it's, what, buy EV, buy companies if your entire portfolio is fully established, you have a good foundation, you have all your risk on, and you really are bored to your tits, pardon the French. Go buy EV, buy companies. Okay, yeah, good. That's an exciting adventure to take, but otherwise, avoid that. It's a dangerous game. These companies, I don't think, will yield too much. I'm not. I think I should know. I'm deviating here. I shouldn't. I think you'd be able to tell me what levels you're seeing in the short term, Brad. What, Nvidia? You mean Nvidia? There are so many supports and resistances. Obviously, the main one you want to be focused on right now is the psychological 100, which is coincidentally also matches with a couple of other supports and resistances, if you will, especially right now. So, if looking at Nvidia, if you're going to look at the daily chart, let's see. Well, you have, first of all, this wonderful gap that probably is going to get closed. You have this 86, 87, 70, that's probably all going to get closed. Let's say you dive down right now, you get your 100. So here you are, the temporary channel, right? The one that we derive from the 100 range, if you will. Wait, is that the short one or is that the long one, actually? Wait. So that's the short one. Okay, yeah, that's the short one. So the short one, as you can see, we've been retaining it. That will make sense daily. So even testing the bottom the same way we've tested the bottom here, so we can tell kind of, even if the market will be retaining potentially that uptrend and the overall market will bring us down. Coincidentally, you can see this. What are we testing right now on the daily? That median. In fact, just let me clean this up. Let me remove the long term. Is that clear for you right now what's going on? Why have we stopped coincidentally at that particular range? It's the median of the overarching day trend that we've been seeing for the past, well, year. Let's call it a year. So let's call it a year. Yeah. Here are your bottoms, right? As you can see, as I often mention, the market is not an abnormality to see the market slip down. You would argue that to close this gap, right? Ta-da, magic, call it coincidence, call it magic, voodoo, whatever you want to call it. Again, hit the top range, retest, go down, mid, bottom, retest, slippage, retest, median. So I would argue back down. Back down gives you about this range, gives you that gap. I would argue 100 to 100 and a little bit where sort of that convergence area happens, and probably this gap. So 100, 110. That's your near-term ranges, if you will. Because again, you can see the momentum. Right? They all, do I have to explain further in English? Look at this. That should make sense to you. I think that sort of works. Allows you to see what I mean. Potentially, if we, and it doesn't matter, again, you would argue, well, Greg, look, We test these areas for a long time. We test. Sure, we can be dragging our feet along that resistance sometime and then testing back still. Doesn't matter. Doesn't change the facts. If we're gonna, again, look further out, you're gonna realize that we're having a similar behavior, right? Again, looks like we're going down, but if you're attentive, what you are having here is a trend down, right? Yeah, we're good. The same way this is also a trend, it's just this is very rapid, right? And this is very slow. All right, we're done with this. We're done with this. What did I miss? How's the chat doing? Robotics. I love robotics. I wish maybe it's because Hyundai were not selling, or Elon's ego is a bit fragile with that. I don't know, or maybe just I'm being an idiot. But I would have been so much happier if back in the day when Elon was buying Twitter, instead of would have bought Boston Dynamics and incorporated it into Tesla. I would have been just absolutely madly in love with that idea. And I don't think he even tried. But then again, he probably, I mean, he has his reasons. Elon is a smart dude. I'm not going to criticize him. It's not that I'm afraid to criticize him. Not, God forbid. It's just, I think he has a grander, smart, bigger plan. It's hard for me to perceive what he's doing because I don't see the full extent of his capability. So that's going to be dumb of me to try and discern why he does certain things. A lot of people, including myself, we don't understand why he chose to buy Twitter, and he bought Twitter, and that's, it's up to him. He thinks that's the smart move. He wants to fight for the freedom of speech. He wants to have a platform that will allow him to express himself. Sure, absolutely, I'm not here to judge. Now, I would have been far happier if he would have went into robotics. Absolutely, I'm a big fan of robotics. We all understand it's inevitable. In fact, we understand what we needed. I remember a statistic that was just sort of given a while back. I don't remember who checked it, but the statistic was something around the idea of that even if we fill all the worldwide necessary positions with all the welders that we have, right, factually have, which was something in the realm of I don't remember. It was like we end up with like 70. We would end up filling 70% of positions. You would still need like robotics to fill in these 30%, just for us to sort of break even and find, just for us to sort of worldwide, for us to have all the welders that we need. So, which is pretty insane. So we already know we need robots. People are like, robots going to take everybody's job. No, we actually need them. We were actually behind in terms of manpower. You need to remember that not everybody runs to be a welder nowadays. A lot of people prefer to be coders and media people and influencers and all sorts of crap. So people don't like to create tangible goods unless they have to. Work in factories and such. Robotics. Tesla and Palantir might fare better during such shit showers making. Yeah, no. Actually, Chob, now you said it very, very good. Yes, very much could be the case. That means the momentum and the volume of Tesla and Palantir is so positive that their descent is going to be a little bit more controlled. Does that mean there will be no descent? Guys, when I give you very low evaluations for these stocks, and it seemed to be very low, what you don't understand that I'm actually taming it down. I'm factoring in that both these assets, especially when we talk about, and the Nvidias, the Teslas, the Palantirs, the firms, and all the really good, proper companies, they will be having a lot of buying momentum, thus mitigating from that downwards momentum. No one says it's not going to drop. It's just going to be descending. It's going to be a controlled descent instead of just a drop off a cliff, if you will, but still a descent. Thank you so much, Greg. What is your IQ? I have no idea what my IQ is. I never tested it. I'm probably a dumbass. Asking for a friend. That's so great. Everyone here is 150 plus for being here. Evie, I like you. Magical. You guys are magical. You guys are a great community, guys and girls. You all are magical, ladies and gents. I can barely Brad, come on. So IQ goes up just watching Why do I feel clueless? No, why clueless? I mean, it's pretty simple. It's pretty simple. The thing is, the market, you cannot throw a stone into the water and expect one, edge of it to have to have the ripple effects go just in one direction, right? We have to be objective about what we see about the market. We have to be objective that the market currently, if you're looking at all the assets, if you're looking at all the indices on medium to large time frames, of course there are some contradictions, right? Nothing is perfect, so to speak. Let me just clean it up for you guys a little bit. And it's not linear. More so, Tom and I, you guys know, Tom and I and the smarter people in the industry always tell you. In fact, we can see that on the screen, right? Let's look at this. Let's look objectively at what we had. This is a clear, distinct downtrend, isn't it? Right? I mean, you literally have to be blind not to see it. But we did have very strong movement to the upside as we were going downwards. That's just the natural procession of the market, ladies and gents. So, and these processes can take what would feel from afar like it's not too long because we look at the chart at the adjusted time frame. Not how it works. That took us, just this sheer process of correction took us, well, a year. And then some, to be frank. So you cannot expect this stronger correction in potential that you see here to be any shorter while conditions haven't really improved in technical analysis, or at least the factors that we're looking at. The indicators, what is the job of the indicator? To tell you what your inability to be objective about is. Like, it's a visual form of our behaviors. What we actually do, this is what it comes through as, and this is the visual form of it, right? Visualization, if you will. You read it as you wish. I read it right now as slowly starting to correct down, like the market that it is. Nothing in the market, even when we have these movements to the upside, nothing is straightforward. We have these corrective movements. You see, again, overall, it doesn't change our destination. So yes, we have a very big corrective movement, and yes, we could have an all-time high, but all that does is postpone that thing that I'm saying that is coming from here to here. Does that matter that much? If you don't execute your trades over here on the top side, you didn't do anything. You just prolong the process. And I would argue that sometimes it's better to jump out or do whatever or partially execute. A whole bunch of ways you can go about it before you see this happen. Because when this will happen, it will be far worse than executing at least partially here. And usually what we advocate for, if you're sitting on proper ROI, if you're sitting on proper gains throughout these following years, at least take your initial investment out. It will allow you to perform completely differently and will allow you to have dry powder for when we actually hit the bottom. Okay? That's kind of how I would see this. And again, not financial advice. That is just my own meandering thoughts and sort of ideas of how to go the correct way about it. Hit the like button. Thank you, Useless. Yes, please hit the like button. That really does help the community, the channel grow. I really want to have these, big lives like Tom has. Will be amazing. Of course, the bigger the community will be, the more I'll be able to do for you guys. Inevitably, subsequently, the channel will be monetized and all that wonderful stuff. As you guys know, Tom and I we will operate very differently than a lot of YouTubers. We just, everything we can, we push back to the community. So started watching, need to watch it back. Nerd, you'll have to, sorry, this I don't know how long we've been going on, but we've ran through a lot of material, but the idea is the same. To put it in simpler terms, we are starting to see the market is flipping us off. Here you go, here's the flip off pattern. The market flips us off. It tells you, here's the bird, buddy. But what we're seeing here is a slow correction and a slow sort of hitting the ceiling, testing, and eventually we're gonna get rejected because the larger time frames are indicative that we are running out of fuel. And we can run on fumes for a little longer, but we're pretty much, for how long can we? And as I said, I predicted this entire move will take about 2 I kind of ifed it and said maybe 3, maybe even a month, kind of thing. But I don't think so. It's gonna take a month. I think we ran it. It ran its course. It ended up being longer than I thought. I thought originally it was gonna be 2 weeks. We are now basically we spent about 3 weeks for the whole process. Hitting the ceiling and now scraping our head against that ceiling, soon get rejected and drop back down. That's my perception. Remember, I could be wrong. I recommend going through the previous videos to be able to be more up to speed why I think all of that. Very off topic. Are you safe? Any more news from, first of all, John S. Sadly, there is no truly safe here. I am relatively safe. I live in the center of the country, so I am relatively safe. Oftentimes, right now, the Gaza thing kind of, calmed down. Although, funny enough, just the other week, I took a bit of a vacation. I went to this, there's a very famous special pool we have here in Tel Aviv. Basically, just went to take a day off in Tel Aviv, went to the pool, and that day somehow Gazans were able to launch rockets that hit, like, I'm not even kidding, 300 maybe 400 meters away from us. 2 rockets they hit the water while I was at the at that pool. So nothing really is safe. Plus, you cannot just sit in the bunker all day. But relatively, I would say I am. I try to be attentive to my environment. I try not to go to places that have too many people. You know what I mean. If it's just very crowded, to be a potential target and all that. I tremendously appreciate. Thank you for asking that. This really warms my soul, not just heart. All the way to the depth of my soul. Not kidding. But like I said, sadly, shit can hit the fan here real quick, real bad. I don't know if you heard, there was an attempt for a terror attack here. There was a terrorist on his way to a stadium that was full with people, and he had a work accident, if you will. His device went off on his way. Sadly, one person got gravely injured and one person died. Just a truck driver who was coincidentally in the area. But the device was 8 kilos of explosive and a whole bunch of shrapnel. So that was, might as well, call it a divine intervention, miracle, whatever you want to believe in. Or, it is very lucky. It is tremendously lucky. So, sadly, nothing truly is safe. But thank you, John. I appreciate. Evie, likewise, guys. Thank you. Appreciate it. I'm trying. Well, I currently am holding. Thank you, Stonks. Much love, brother. I am currently. It's not a secret. I, in fact, shown my position as it is. I'm currently holding 1,800 SQQs at an average of 13 something. But I am planning to buy more. Yes, very soon I am planning to buy more. The bare minimum that I want to have is 2,000. But those who know me better. The smarter idea to manage that sort of situation, if you really believe in the position and believe, I believe, or if I feel, no. If you're confident due to the reading that you have, you want to have more so you can sell as you're having sometimes these temporary impulses, or basically short-term trade, if you will. Just get rid of some as you go with no intention to buy back, only when you're certain that the market is actually starting to be elevated. This way you're having some gains as you go, and worst thing, the market starts to correct downwards, you already retain some of the gains, which allows you to in turn rebuy on the bottom and have a better multiplier. So there's that. Stay safe, Thomas. Thank you very much, brother. Thank you. Also, you guys need to know, turns out there's plenty of guys and girls from Israel who watch my videos. I was surprised to learn that. So wish all of us, because it's not just me, but thank you. In essence, I understand you guys wish it to all of us, but yeah, it's pretty crazy. It's pretty crazy living in that environment. It's hard to imagine for most of you. I can understand. It's unpleasant, but what other choice do we have? We have no other choice. It's an existential war. A lot of people that used to scream from the river to the sea, don't know what river, what sea, and don't realize they were basically calling for genocide while saying that we're doing genocide. It's just hilarious. The hypocrisy and the irony is on another level. Side question: do you pay for TradingView? Yes, I have a premium account. So, but this for me is a work tool. I need it. So yeah, I mean, I have a premium account. You guys, what you can do is sign up whenever, and that's when what I did in the beginning, and just sort of renew your subscription on Cyber Monday or Black Friday, and that way I think you can get up to 70% discount. That's usually how they run it, and just keep it cyclical, annual, basically. Resetting your subscription on these dates, and thus you get a very low price. So yeah, there's that question. Do you pay for waiting for Black Friday? Yeah, Mike. I mean, Cyber Monday, they all work, right? Tool set. You can wait, but you can also sign up now, right? And then when you basically almost like you choose in advance to pay, right? So they make up for the difference. It's not like they charge you twice or something like that. Actually, TradingView are very fair, guys. I'm gonna be honest. TradingView is mm, comparing to the stuff and platforms I've seen when I started, and to all the meta traders and unique belt platforms for all sorts. And especially in interactive brokers, which is, I mean, I hope the interactive cannot sue me for this, but it sucks. It's one of the worst platforms ever. In fact, instead of looking to sue me, they should be looking to improve their platform, invest money in that. So, yeah. All right, ladies and gents, if I think this has been far too long. I don't know how long this has been. It feels like I've been live for like a month straight. Just pardon me. Sorry for I had to clear my throat. Sorry. And then Ryan, accurate must touch it. 3 points. Brad, that's a very interesting question. It can be more. Well, it's to answer it in the most precise way without going too deep. Yes, far more likely, especially when you look granular. If you look deep enough, if you zoom close enough, you will realize that it actually ends up being a lot more than just 3 times per se. But that number, the amount that it ends up retesting, it's actually there's a direct correlation to how our psychology works. We as people, altogether, as the entirety of the market, if you will. It's not an exact coincidence. More so, it has to do with the harmonic patterns. Oftentimes, it correlates with harmonics directly to why we have these threes and fives very often show up again and again and again. But remember, the larger the time frame, the larger the amount of cycles, the smaller the cycles. Hence, it's going to be more difficult to identify. And you should not be following that, 3 points, right? It's not always 3 points. It is often that would be the case. That is quite true. But that's, again, it's not binary. It's not black and white. So oh yeah. Oh my God. Yes, I forgot about that. Right. We need to actually. You know what? Let's stay live. You know what? Let's stay live. See how the market will react to this. Stonky, thank you for reminding me, brother. I have almost forgot. And those who don't know what we're talking about, we have the FOMC minutes happening in about a minute. So let's see how the market will react. You know what? Let's stay around for a couple more minutes. So let's see. Yes. You can ask more questions in the time being, maybe have a little bit more banter. You know what, maybe I'm going to do another shameless plug, reminding those of you who were not here, I have a one-on-one course that I teach technical analysis, not just the stuff that I show here on the lives, far more advanced stuff, far more complex stuff as well, things that allow you to have a reading that is more advanced, similar to what I do on my own. Allows me to see and confirm my not biases rather, but when I have a bias generated through what I'm seeing, I have the ability to confirm these and not just speculate. One final spot, because I will be taking a vacation. There will be no signing up during my vacation. I will be doing lives, but there will be no signing up. There will be no sessions. So whoever is signing up right now, you're basically the one less sign up before I go back from vacation, which might take a while. Just to go to, sorry, why did you choose to go so heavy in SQQ? Taylor, let me tell you that, and I'm going to be, those who know me know better, I'm a very honest person. I would honestly tell you that this is very light. I would load up far more. Sadly, liquidity in life and whatnot makes me limited right now to be able to load up with that amount, to have a certain backup and various things that I'm very traditional like that, and I need to have certain liquidity for various things and whatnot, and I need to put into savings, there are a lot of spending, a lot of things I need money for, to be frank. But if I would have been able to have a position anywhere near what I would have really wanted, it would have been closer to 5,000 shares of SQQ, which means 4,000 that I want to own and 1,000 that I have to play with. That would have been the actual calculation. Sadly, right now I'm forced to go light on this. So we see we had a spike. We had an immediate spike right here, and the market is starting to eat away back at it. The spike brought us back. Well, we're already in the gap. It doesn't matter. The gap bottom is this line. It's that 5607. And we're, as you can see, again, we're slowly moving. We're doing that wedge, all in all, still retaining that resistance, although right now technically we're above. It doesn't necessarily mean, again, that's a slippage process. That's the actual process of testing, and let's see what will happen. So right now we can see the entire spike that was created post the minutes was eaten away back down, all the way back to the trend. Now stopping at it. Let's see, not breaking below. Let's see. Well, the market seems to be very negative about it. So there is that. At least we can see that. Let's see. Let's see if I can bring on. Give me a sec, guys. Let's see charts. Schedule. Well, I almost forgot about the chat. Shit, give me a sec, guys and girls. So close. That's the thing, Taylor. A lot of people, by the way, to your question, a lot of people are not familiar with it, and then say, well, it's a bad idea for retail to own it and to hold it. So who do you think does? I would disagree. I mean, most of the time, yes. Look, let's say right now you think we're at an all-time high, and you might perceive a correction. You want to be able to determine that, right? Maybe you're about to exit before the biggest rally in history. How do you know? Technicals would usually give you a hint to that, right? What you're saying is because, if somebody drives once every 4 years, they don't need to have a driver's license. That's not how it works. Even if you drive once every 10 years, you still need to know the rules of the road. So you need to have a driver's license. So it is take it for what it is. If you're buying, you want to know that you're not buying at the top or before a big correction. For example, how to recognize the technical analysis. Oh, a falling knife again, how to recognize we're not still in process, how to recognize the cycles, how to recognize that something bad is gonna I would argue that there are some of my students here, I would disagree with you. I would argue that it doesn't matter whether you drive every day, once a week, once a month, or once every 4 years, you still, or once a decade, you still need to have a driver's license and need to know how to drive. That's my opinion. Of course, to each their own. Board 425 cut and the meeting. Okay, I mean, we know they're forced to cut one way or another. We know it's too late. Those who've been in the community discussed this, and we know that's at this point it's basically unavoidable. It's unavoidable, and it's too late. If they would have been able to perform the right way, they would have been able to push higher. It would have been far more painful potentially, but the fact of the matter is that they are too late, and nothing that we have outside the market as a factor to its own self does not help us, ranging from the supply chain to oil to geopolitical tensions to US to you name it. Literally, there is, if you're going to have two lists of positives and negatives, our list of negatives is far more extensive than the list of positives. That is just the sad reality right now. And more so, I expect a correction, like we said, that is more reliant on all of these factors together. It's not just the technicals or just one thing, it's everything all together. Alrighty, ladies and gents, I think we've been on for long enough. I'm not seeing any questions here, so I think we're done. I think. No, I think we're seeing how the market is not overreacting right now too severely. So with that in mind, thanks, and until next time. Yeah, pretty much. Thank you, guys and girls, for showing up. I hope you guys enjoyed this as much as I have. Join the community. Don't forget, ring the bell, move it to everything, like, subscribe, share, all that great stuff. That will help the community and my channel grow. Subsequently, you guys enjoy the channel more, I believe. And that's it. That's it, ladies and gents. My pleasure, Lucas. I don't think I've seen you here before. Good to see you here now and to know that you are a member. Legend. Thank you. That's what I tell everybody. When I show my admiration to somebody, I say, legend, or legendary legend, or something like that. Lucas, my pleasure. Thank you very much. Truly, my pleasure, Singer. Good to see you here as well. All right, boys and girls, you have a wonderful rest of the day. I will see you on the next one, which will hopefully be tomorrow. Sorry for skipping yesterday. I just didn't think that there was anything important to mention because you knew we were going to start scraping the ceiling. So, but that's it. Bye-bye.